Okay, so hello ma'am. Assalamualaikum warahmatullahi wabarakatuh. So we are from group 6. Here would like to present our financial management projects about financial analysis of Indofood Sukses Makmur TBK. And here is for today is our group member. My name is Ariq Furqan Hakim.
My name is Alliefa Maulana Kusnadi.
My name is Atikah Fitriyyah.
My name is Rasyad Kurnia Putra.
Moving on into the first ratios of this project is the current ratio. So we have the current ratio is the formula is current asset divided by current liabilities.
Okay, in 2022, 61.700 61.769.722 divided 44.197.067 equal 140. So the interpretation is demonstrate the company ability to pay short-term liabilities with current asset, indicate healthy liquidity.
And for the 2023, we have 63,101 and 797 divided by 32,914,504 equals 1.92 times. And the interpretation is Indofood has almost twice the current assets compared to the current liabilities. This indicates a strong short-term liquidity. And however, ratios that too high may suggest underutilized assets, so that maybe Indofood can utilize their assets more often.
So next in 2024, uh, it's 74,931,589 rupiah. While its current liabilities were 40,120,569 rupiah. It's 1.887. So in 2025, highly liquidity, the company is able to cover short-term liabilities.
Okay. In 2022, Indofood's current ratio was 1.40, rising to 1.92 in 2023 and slightly decreasing to 1.87 in 2024. This shows that the company consistently maintains strong liquidity to cover short-term obligation.
Moving on into our second ratios is the acid test ratio with the formula is, I'm sorry, it is misspelled, but the formula is current assets minus inventories and divided by current liabilities.
2022, 61.769.728 minus 16.564.247 divided 44.197.067 equal 102. So the demonstrate the ability to pay short-term debt without relying on inventory still liquid and safe.
Moving on into 2023, we have 28,575 and 968 as the current assets, plus 8,113 and 389, plus 7,979 points 466 divided by 32,914 and 504 equals 1.37 times. These ratios above 1 is generally considered safe, meaning Indofood is not dependent on selling inventory to meet their obligations.
So in 2024, Indofood had current asset of 74,931,589 rupees. So the inventory is of 15,031 1,776 rupiah, and the current liabilities of 40,120,569 rupiah. So the total is 1.50. per times. They show that even without selling the inventories, Indofood is still able to pay all its short-term debts. The company liquidity in 2024 was therefore considered very healthy.
Okay, the acid test ratio improved from 1.02 in 2022 to 1.37 in 2023 and further to 1.5 in 2024. This indicates Indofood's ability to meet short-term liabilities without relying on inventory, reflecting very healthy financial conditions.
Moving on into our next ratios is average collection period. The formula is accounts receivables divided by daily credit sales.
Two, 365 divided 13.15 equal 27.8 days or about 28 days. So the interpretation that the company is quite efficient in collecting its receivable with less than 1 month to convert receivable into cash.
Okay, moving on into 2023, we have 36.5 or 1 years divided by 14 as the account receivable, and that is equals to 26 days, which is interpreted as Indofood takes approximately 26 days to collect receivable, which is fast compared to typical industry range that would take 30 to 45 days. The efficiency improve cash flows and reduce financing needs.
So for 2024, it's 365 days divided by the accounts receivable turnover of 13.5 times. So it's mean Indofood need less than 1 month to collect payment from its customer, which reflects efficient credit management.
Average collection period receivable were collected in about 28 days in 2022, shortened to 26 days in 2023, and slightly lengthened to 27 days in 2024. Overall, Indofood demonstrated efficient collections, converting receivables into cash in less than a month.
Moving on into our next ratios, we have ART of our account receivable turnovers. The formula is credit sales divided by account receivables itself.
Okay, 22, 27.40, 446.583 divided 9.066.041 equal 3.303 per quarter or 12 annualized. The interpretation, the speed of collective receivable is quite high, indicating good billing efficiency.
Okay, moving on into 2023, we have 111,703 and 611 divided by 7.827,466 plus 8,280,081,000, I'm sorry, and 536 divided by 2, and we have the equals is 14 times. So the interpretation is Indofood collects its receivable about 40 times per year, which is quite efficient. It suggests strong credit policies and effective collection practice. High turnover would affect the reduced risk of bad debits.
So in 2024, it was by dividing the company net credit sales of 30,791,538 rupiah by the average account receivable, which was the average of 10,318,544 and and 7,978,466 rupees. And the result is 3.37 times per quarter, or around 30.5 times annually. This means Indofood collects receivable about 30 until 14 times per year, showing strong collection efficiency.
Okay, so receivables turned over roughly 12 times in 2022, increased to 14 times in 2023, and remain strong at 13.5 times in 2024. This highlights consistent efficiency in managing credit sales.
Moving on into the next ratios, we have the inventory turnover. The formula is COGS divided by inventory.
80.58 divided 16.564.247 equal 1.11 per quarter or 40.4 per year. The interpretation is inventory revolves around every 80 days, quite efficient in stock management.
Okay, moving on into 2023, we have 75,653 and 142 divided by 15,213 497 plus 16,517,373 divided by 2 equals 4.8 times. This indicates that Indofood cycles through its inventory nearly 5 times a year, or roughly every 75 days. This is very reasonable for a food and beverage company. Balancing freshness within the supply chain stability and a higher turnover would indicate leaner inventory.
So next in 2024, one 20,279,982 rupees divided by 15,031,776 rupees is 1.35 times. This result show that Indofood turnover its inventory only 1.35 times a year, much slower than 4.8 times in 2023. This suggests a buildup of stock or slower product movement.
So inventory turnover was 4.4 times in 2022, improved to 4.8 times in 2023, but dropped sharply to 1.35 times in 2024. This decline signals slower stock movement and potential challenge in inventory management.
Okay, moving on into our next ratio, we have debt ratios with the formula is total liabilities divided by the total assets.
44.197.067 divided 187.698.90 equal 23.54%. So show a relatively low level of debt with a conservative capital structure and lower financial risk.
Okay, moving on into 2023, we have 86,123,066 divided by 106,587,957 equal 4.6% or 46% or 0.46. 46% of Indofood's assets are financed by debt. This is moderate leverage, not excessively risky, but it's still very significant. It shows reliance on debt financing, though equity remains the majority source of the company's.
2024, the debt ratio in 2024 was calculated by dividing total liabilities of 94,340,417 rupiah by total assets of 198,318,245 rupiah. It was 47 0.47 divided by 47%. So it's almost half of the asset are financed with debt still within safe limits.
Okay, so debt levels rose from 23.5% in 2022 to 46% in 2023 and 47% in 2024. Indofood shift to a more leveraged capital structure, TUG still within a safe range.
Okay, moving on into the next ratio is time interest earned or TIE, which is the formula is EBIT or EBIT divided by interest expense.
22, 4.214.9074 plus 1.047.061 divided 1.047.067 equal 5. So profit is 5 times the interest expense, indicating that the ability to pay interest is very good.
Is my internet already good? Okay, I will continue. Indofood earns over 5 times its interest expense. This is a strong coverage ratio, meaning the company is unlikely to face difficulty meeting interest obligations. The sharp improvement from 2.5 times in 2022 signal reduced financial risk.
So in 2024, the times interest earned ratio was divided by dividing earnings before internet and tax EBIT of 5,929,972 rupees by interest expense of 2,355,335 rupees. It's 2.52 times. Indofood is enough to cover the interest burden about 20 burden about 2.5 times. It is still safe, but not very loose compared to previous years.
Okay, so the interest coverage was strong at 5 times in 2022 and 5.43 times in 2023, but fell to 2.52 times in 2024. This suggests rising pressure from interest expenses compared to earnings.
Okay, we're moving on into our next ratio is total assets turnover, which is the formula is sales divided by total assets.
2. 27.446.583 divided 187.60 198.90 equal 0.15 per quarter or 0.6 per annualized. Every rupiah one asset generate rupiah 0.6 sales per year, moderate asset utilization efficiency.
Moving on into 2023, we have 111,703,611 divided by 186,587,957 equals 0.6, which is indicate that Indofood generates 0.6 rupiah in sales for every 1 rupiah of assets. This is moderate efficiency, typical for large conglomerate with significant fixed assets.
So next in 2024, Indofood generated 30,791,538 rupiah in sales and own total asset of 198,318,245 rupees. It's defining this gives 0.16 time per quarter or around 0.62 time per years. So every 1 rupees asset only generates by 0.16 sales in 1 quarter, or if annualized, it's around 0.62 times per year.
Okay, asset turnover remains stable at 0.6 times in 2022 and 2023, and slightly improved to 0.62 times in 2024. Indofood's asset utilizations is moderate, typical for large conglomerates.
Okay, so moving on into the fixed asset turnover, we have the the formula, which is net fixed assets divided by moving on.
57.446.583 divided 46.358.174 equal 0.59 per quarter, 2.4 per year. So the efficiency of using fixed asset is relative good.
Moving on into 2023, we have 111,703,611 divided by 47,295,092 equals 2.36 times. Indicates that Indofood generates 2.336 rupiah in sales per 1 rupiah of fixed asset. This is a very good utilization rate.
So next in 2024, we have 30,791,538 rupees dividing by 47,224,346 rupees. It was 2.6 times per year. So the results is Indofood used its fixed assets efficiently and maintain optimal production capacity.
Fixed asset turnover was 2.4 times in 2022, 2.36 times in 2023, and rose to 2.6 times in 2024. This reflects efficient use of production capacity.
Okay, so we're now moving on into the next ratio is operating ratio investment. And we have the formula is operating income divided by the total assets.
2022, 4.214.974 divided 187.698.993 equal 2.25%. So the efficiency of operating profit compared to total asset is quite good.
Moving on into 2023, we have 19,677,674 divided by 186,587,957. This would equal into 10.6%, which is indicate that Indofood operating profit relative to asset is 10.6%. This highlight that strong operational efficiency and independent of financing and also tax effect.
So in 2024, it have 5,929,972 by defining by 198,318,245. So it's equal 0.023. It seems like 2.3%. So it show efficient operating profit to total asset.
Okay, operating return was modest at 2.25% in 2022, peak at 10.6% in 2023, then dropped back to 2.3% in 2024. Operational efficiency fluctuated significantly across the 3 years.
Moving on into the operating profit margin as the next ratio, we have the formula which is EBIT divided by sales.
4.214.9 974 divided 27.446.583 equal 15.3%. So the margin from strong business operation demonstrating operational cost efficiency.
Moving on into 2023, we have 36,058,469 minus 16,372,795 divided by 111,703,611 equals 17.6%, which indicate that Indofood retains approximately 18 cents of operating profit per 1 rupiah of sales. This would reflect that Indofood have a strong cost control in selling and also on administrative.
So next in 20 and 24, the OPM is 5,929,972 divided by 30,791,538. It's 0.193. So it means Indofood earned 90 cents of operating profit from every 1 rupees of sales, reflecting better control of operating costs.
Operating margin strengthened from 15.3% in 2022 to 17.6% in 2023, and further to 19.3% in 2024. Indofood show strong cost control and operational efficiency.
Okay, moving on into net profit margin as our next ratio, we have the formula is net income divided by sales.
And 03.388 divided 27.446.583 equal 0.12. So every 1 rupiah sell produce a net profit of 0.12 rupiah is good profitability.
Moving on into 2023, we have 11,493,733 divided by 111,703,611 equals 10.3%, or indicates that Indofood earns approximately 10 cents of net income per 1 rupiah of sales. This indicates that it is very healthy for Indofood profitability, showing efficiency after interest and taxes.
So next in 2024, the EPM is 3,542,048 divided by 30,791,538. So it's equal 0.115. So it's the company earned about 11.5 cents of the net profit per rupees of sales. It's showing good profitability after interest and tax.
Net margins were 12% in 2022, dipped to 10.3% in 2023, and recovered to 11.5% in 2024. Profitability remains healthy overall.
Sorry, are we still audible? Okay. So continue into the return on equity. We have the formula, which is net income divided by the total equity.
By 303.388 divided 991.308.828 equal 3.6 percent quarter or 14.4 annual. High return on shareholder capital, indicating investment with good return.
Moving on into 2023, we have 11,493,733 divided by 100,046 464,891 equals 11.4%. Indicates that Indofood generates an 11.4% return on shareholders' equity. This would attract the share or the stakeholder, and especially compared to typical cost of equity in general.
So next, in 2024, the return on equity is 3,540,2048 divided by 103,977,828. It's it's 3.4 percentage in quarter is 13.6% per year. So it indicate that shareholder earn a return of 13.6% on their investment, which is remain attractive and consistent.
Okay, so the ROE was 14.4% in 2022, declined to 11.4% in 2023, and improved to 13.6% in 2024. Despite fluctuations, returns to shareholder stayed attractive.
Moving on into the gross profit margin, we have the formula, which is gross profit divided by revenue.
In 2022, 9.040.855 divided 27.446.583 equal 32.9%. So high efficiency in the production process.
Moving on into the 2023, we have 36,050,469 divided by 111,703,611 equals 32.3%. Indicates that Indofood retains approximately 32 cents of gross profit per 1 rupiah of their sales. This shows that Indofood have a very effective management of production costs and pricing power.
So next in 2024, the GPM is 10,511,556 divided by 30,791,538. It's 0.341. It means 34.1%. It indicates high efficiency in the production process and raw material costs.
So the gross margins were stable at 32.9% in 2022, 32.3% in 2023, and slightly higher at 34.1% in 2024. This reflects consistent efficiency in production and cost management.
Okay, moving on into the return on assets. We have the formula, which is net income divided by the total assets.
22, 3.303.388 divided 187.698.993 equal 1.8% in quarter, or in annual is 7.2%. So the efficiency of fishing asset in generating profit is quite high.
Moving on into 2023, we have 11,493,733 divided by 186,587,957 equal 6.2%. which indicate that Indofood earned 6.2% on its total assets. This is very solid, showing efficient use of resources.
So in 2024, the return of assets is 3,542,048, divided by 198,318,245. It's uh it's 1.79% in quarter, but in annual or year is 7.2%. So it's mean Innova generated by 7.2% return on all its assets, indicating efficient use of research to produce profit.
Okay, so the ROA reached 7.2% in 2022, slipped to 6.2% in 2023, and returned to 7.2% in 2024. Indofood continues to use its asset effectively to generate profits.
Okay, ma'am. So I think that's all from our presentation from Group 6. Thank you for your attention. Assalamualaikum warahmatullahi wabarakatuh.